Bloomberg Audio Studios. Podcasts, radio, news. This is the Bloomberg Surveillance Podcast. Catch us live weekdays at 7 a.m. Eastern on Apple CarPlay or Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
This is a joy because we keep very much track of people we short. Oh, Mike Green, I'm sorry. We got breaking news. You're going to be on for a minute and a half. So this morning, I don't care if there's breaking news now. We're not going to go to it. We're going to go to Mike Green here to get some good analysis about what's going on, of course, with Simplify Asset Management. I look at the Washington Post feed, the New York Times feed. It's nuts out there. How do you synthesize the chaos over into just remain calm to execute investment process?
Well, I think all of us are kind of hoping that that chaos that you're describing is just the flurry of blows that comes out from an aggressive boxer in the first round, and that eventually it settles down. But it is remarkable when you kind of look at what's happening. We used to wake up to market volatility and look to the politics to explain it. And instead, today, we're looking at political volatility, and the markets remain totally sanguine. I think a lot of it is just we don't know what to do.
Right. Man, I look at it, folks, I don't know if you know this, but Lisa's newspapers at the back end of the 7 o'clock hour, that's funded by an NGO, a government thing. And the answer is like even NGOs are unfunded right now? Something like that?
Yeah, so this is the key question. Now, a federal judge has put a stay on this for a week. We'll find out on Monday what the ultimate decision is around this, or at least what the next step in the process. But yeah, this decision to stop funding the NGOs, et cetera, in pursuit of basically making sure that Trump's executive orders are enforced is going to be one of many questions. We don't know how many payrolls can't be met. We don't know how many different firms are ultimately going to be affected by this, how many commercial real estate properties that are currently housing people are suddenly going to be faced with their bills unpaid. We just don't know.
Is the best advice for an investor to try to ignore the noise and focus on the fundamentals? We have earnings this week. Maybe that's really what matters?
Well, we do have earnings, and I heard earlier the commentary about, we're excited that ASML's orders are off the charts, but remember, ASML is reporting off of a December quarter. Right. Yep. DeepSeek came out on this past week. We've also known that this was kind of the case, right? This is very much like the development of, multiple signals and amplification that happened in fiber optics that changed the tone around fiber optics. I
got to go here. Elisa, help me out here. T-Mobile's out. One of Lisa's entourage whispered in my ear, go to her on T-Mobile. I mean, it's plus 221, and it's up $7 now.
Yeah, earnings smash expectations for it. So I wanted to look. Let's check in with the shares.
Is a T-Mobile.
Do you know I pay a mortgage payment to T-Mobile? Remember Vince Farrell?
Yeah,
Vince Farrell was just such a great supporter of Bloomberg surveillance. I miss him every day. We lost Vince Farrell way too long. We used to sit in tears in the radio studio with Ken Pruitt and try to figure out how many children their phone bills we were paying. Oh, yeah. And with T-Mobile, good morning, T-Mobile.
Up 3%.
I hope the mortgage payment helped. Pa, why don't you keep us going with Mike Green?
Hey, Mike, so we sit here, we had 2023 and 2024, both north of 20% returns on the S&P 500. How do you think about 2025 going into the year? I mean, should we just temper that and hope for a single-digit return? How do you think about it?
Well, I'm often reminded of an event in late 1999 when I asked my mother-in-law, she'd had a phenomenal 1999. I said, what if stocks were up 15% in 2000? Would you be surprised? She's like, yeah, I'd be really surprised. I'm like, well, then why not take something off the table? And her reaction was, I'd be very surprised if they were only up 15%, right? So if you actually look at what's happening in the market on a year-to-date basis, a lot of the not Mag 7 stocks, the NVIDIAs, the non-NVIDIAs, et cetا of the world, they're up sharply. The Dow's up almost 8%. Yep. Before the first month of the year is out of the way. So it's hard to argue this is going to be another calm year.
We're going to hear from the Fed today. Tom Keene and the surveillance team have full coverage starting at 1:30 p.m. Wall Street time. What should we expect anything from the Fed this year, or just kind of sit on the sidelines and follow the data?
We definitely want to follow the data, but one of the things that I think is really critical here is the market is only pricing about a 10% probability of a cut at this meeting. They're pricing very low probability of the idea of a hike throughout the year. That's backed off since obviously NVIDIA. But if we look at that commentary that's going to come out, this is where we're really going to find out what the Fed is thinking.
I agree.
So we aren't going to know with the press release. We know what's going to happen. The Fed is not going to surprise the market there. Whether Powell chooses to react to the first week of the Trump administration in terms of answering questions, implications of it, inflation, concerns, we genuinely just don't know.
I totally agree. Totally agree. I just refuse to believe it's a snooze fest with all that's going on politically in Washington. A treat. Mike Green with us to Simplify. We continue here an extended conversation to begin your day. Many other worthies coming up on the Fed meeting. And on the equity markets, Cam Dawson will be with us later as well. The NASDAQ, Paul, up 0.4% right now.
So, Mike, what do you expect here for earnings? If I've got a Fed that's going to be kind of quiescent, we're going to say, for 2025, maybe one, maybe two rate cuts, it puts a lot of pressure on earnings, doesn't it?
It does put pressure on earnings, and one of the most important areas that puts pressure on earnings is actually from not the leading companies, those companies that are flush in cash, et cetera, but those companies that are now facing refinancing. So if we look at things like the high yield index, we've actually seen credit spreads compress, but many of these companies have not refinanced that paper from the 2020, 2021 time period. You're now approaching that maturity wall. And when these companies refinance, even though credit spreads are tight, the absolute level of interest rates are a lot higher. So in many of these companies, you're talking about going from 4 to 4.5% coupons to 7 to 7.5 or 8% coupons.
Mike Green, how do you perceive Apple? On Monday, we had a total full-scale panic, and everybody turned to Cupertino and said they're not doing the CapEx ballet. Is that a heritage from Steve Jobs? Is that a Tim Cook thing, or is it blind luck?
Well, I think it's a combination of components. So Apple has always been a capital-intensive light business. They've always chosen to outsource their manufacturing while keeping control of their intellectual property. But I think the much more important message is nobody lost their job on Monday. And so 401k flows continue to come into the markets. Investors are continuing to pile in. A lot of this is a function of the autopilot of the way that we've set up flows into our system. When people are working, they're contributing to the stock market. That money is flowing into an index fund.
Right.
And guess what that index fund is buying?
Spring training, February 9th. The Dodgers play in Tokyo.
Oh,
so they're starting early spring training. What inning are we in, Mike Green, of this bull market?
I have thought we've been in extended innings for an extended period of time. A typical bull market lasts for between 3 and 5 years. So we're probably getting towards the end of it. Am I yet ready to call my mother-in-law and say, you must get out? Not quite.
So we had some news earlier about this whole China AI thing, and we're all trying to learn it literally on the fly. AI has been a theme for this stock market really for a couple of years now. It's been a supporter of growth, and it just means so many positive things for so many different industries, was the assumption. Did anything change for you with this DeepSeek news earlier this week?
Well, the fascinating thing is that the DeepSeek news was actually out weeks ago, right? So, and candidly, months ago. So the key innovation was actually the handling of memory components. They announced and released a paper in August of, I think it was actually August or July of last year, that actually highlighted these breakthroughs. And a lot of this stuff, if you just think about it in evolutionary terms, is really straightforward. Can we do more computing with less energy? Can we actually split up our brain in terms of a reptilian brain and a mammalian brain, the cerebellum, et cetera? That's all we're doing with these components. They're natural evolutionary processes that simply say these things are getting better and cheaper, et cetera. One stat I just wanted to share with you, if you look at the actual inflation-adjusted price of an Apple II, the DeepSeek innovations basically drop the cost of AI, an LLM for the average individual, down to roughly the same inflation-adjusted cost as an Apple II in 1977.
Mike Green with us to Simplify. We're going to continue an extended conversation to get us going. Futures up 5, red and green on the screen, but I got a NASDAQ up 0.4%. Meta and Microsoft this afternoon. And more importantly, Paul, help me, in the 11 o'clock hour, you have the Chief Executive Officer of T-Mobile?
Yeah, I think so. Absolutely. 11:15.
Did you pay your bill?
I think we're all good.
We're all good on that?
Yeah, hopefully he won't be coming with a collection notice. So we'll get the latest. I mean, that telecom space, Tom, the wireless space, it's so competitive, but we'll have to see.
So competitive, it's killing me.
Killing me, exactly.
They get this, it's all free, and then 90 days later, it's like, boom. Hello.
Yep, exactly right. Hey, Mike, what screens well for you guys these days? Are you, I think probably the last 10, 15 years, technology has led this market. Is technology still going to lead this market going forward, do you think?
It's hard for me to see leadership change in a very meaningful way because I spend so much of my time focused on the passive components. And these largest companies, there's a friction that is created by these orders, and so it just pushes the leadership further. This Monday, when we had the news of DeepSeek and the hit on NVIDIA, I ruffled a lot of feathers by saying, I just don't see why this is going to change. And here we are 2 or 3 days later, semis are back in charge, markets are being led by the largest companies.
Well, how have ETFs changed this? And the fact that Mike Green and I and Paul Sweeney, I mean, I'm going back to wheat for securities here now, way back. This is right after the Confederacy pulled back from the Shenandoah Valley. And the basic idea here is we used to rotate. Baloney. We don't rotate anymore. How have ETFs and the dynamics changed that?
Well, it's interesting because you actually can see the rotation. So immediately after Trump's election, we saw small caps take off, right? And you saw the actual flows into things like the IWM ETF. You can track the shares outstanding. There's explosive buying of that on this theory that we should rotate. Well, guess what? Once you've rotated, what do you do next? You reverse rotate. And so small caps then saw people basically move away from them. And the market went right back to doing what it was doing before, which is the vast majority of the flows are people who are not rotating, not doing anything other than putting money in their paycheck into the market on their 401ks on a weekly basis or a bi-weekly basis.
That's the second time you've mentioned that. I mean, the financial media is ignoring, and Larry McDonald was brilliant at this. There's just this wall of money almost inputting into the market on a daily basis, right?
Yeah, it really is, and that money flows in, and what does it buy the most of? NVIDIA, Apple, Microsoft, et cetera. Now, the relative shifts, like things like NVIDIA catching fire and people waking up to it, that's actually exacerbated by this, because if you think about what ends up happening, Tom Keene and his brilliance, it's like NVIDIA, it's the future, I'm going to buy some of these shares. Well, who's going to sell those shares to you? The passive index fund will not sell those shares to you under any conditions unless a general sell order comes through. And so you're competing with other people who are having the same insights. That can cause that sort of sharp outperformance that we've seen. But once it's there, it's kind of built in.
Mike Green, one final question. We've got to get Michael Barr in here, but one final question, and it's just simply, what do you say to our listeners and viewers in cash?
Well, this is a very challenging one, right? Because the FOMO component of watching your neighbor get rich is really, really difficult. I just keep emphasizing for people, invest for what you need, not what your neighbor wants. And the reality is that we've got real interest rates through tips and through duration at this point that are attractive enough to allow many institutions and many households to meet their objectives in terms of retirement. I just encourage people to make sure that you're thinking about that income portion of your portfolio and recognizing that the volatility that we are not seeing currently will eventually return.
Did you get enough time today?
I did.
Mike Green, thank you so much. He's been in here, folks, like 3 times. It's, oh, Mike, I'm sorry, you're on for 90 seconds. That was great to have an extended conversation.
You're listening to the Bloomberg Surveillance Podcast. Catch us live weekday afternoons from 7 to 10 a.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
We have to talk to Amanda Lynam of BlackRock about adult material. But we got to do this first. This YouTube thing I'm doing and Paul's doing, our heads are spinning. It's all new. CNN's dealing with it. Everybody's dealing with YouTube. And we have a team that's been brilliant. The word they use, Paul, Colin of the Twins, says discoverability.
Oh, okay.
And the biggest thing I did is I switched to YouTube Premium. It's $167 a year. If you pay annually, it's $10 a month, $120. Amanda, you did the same thing. What's the difference you perceive in YouTube Premium versus regular run rate YouTube?
I love it, and thank you for having me, because I can watch you guys on 2 times the speed without the commercials. So I can stay informed. Yes, so I can stay informed, but it takes half the time, and it's amazing.
Takes half the time.
Yeah, exactly. But I can. You guys are so good that I can follow along. Yeah, so
it's 40 years of fixed income analysis. Right. When you're listening at 2 times the speed, how will you listen to Jerome Powell at 2 times? That's an idea. We could do the press conference at 2 times the speed.
Exactly.
What are you going to listen for today?
Today I'm going to listen for two things. One, do we still think that policy is meaningfully restrictive? And then two, what is the bar for cutting rates? Is improvement in inflation enough for them to cut rates? Or do they actually need to see further cooling in the labor market? I think that will tell us a bit about the forward path. I'm not expecting really a cut to be on the table even in the March meeting, because the January seasonality and inflation will probably distort the numbers a bit. But I do think that as we move towards the second half of the year, we'll want to see what the next action is in terms of an extended pause or a cut.
Across the fixed income community this year to date, just so far here in January, we have some positive returns here led by high yield. What is the macro credit call for you guys in 2025?
So I think the lesson from 2024 is that there was an opportunity cost to being too defensive.
Yep.
And really our view on credit in 2025 is you just have to be very clear on why you're buying credit. We're recommending that investors buy credit for carry and for yield, not for the total return boost from, for example, tightening in spreads or a decline in rates. Spreads are already quite tight, so there's not a ton of room for absolute spread tightening from here. And our base case is that structurally higher interest rates will prevail. So if we do get a boost to total returns from those typical drivers of total returns, that would be a bonus. But actually, we see a pretty compelling opportunity from the all-in yield perspective and corporate credit.
How do you feel about investment grade versus high yield?
Yeah, I actually am comfortable moving down the quality spectrum. I would say for investors that can only play in investment grade, triple Bs are a nice option for that. So moving down in the quality spectrum. I would say the big takeaway over the past few years, frankly, is that there's a lot more fluidity between these markets. Actually, if you look at credit metrics between the high end of high yield and the low end of IG, they're converging. There's not as steep of a penalty for a company to fall from IG to high yield. We're just seeing a lot more of the blurring of the lines. And so that line of demarcation between IG and high yield is much less punitive than it used to be. We actually like moving down in quality. Now, I would say when you get into things like triple Cs, especially on triple C loans, have underperformed because of certain technicals related to CLOs and rating sensitivity. You have to tread a bit carefully. But in general, we like credit risk. And I looked at the Atlanta Fed GDP now, 3.2%, solidly above trend. And so that's the key for credit is the growth backdrop.
I agree. This is my main theory is the number one thing we've been wrong on has been the growth story. Is a continuum. Does BlackRock believe the growth story continues?
We do, and I would say the one signpost to watch, because I think amid all of this uncertainty and volatility, we just need to know what to watch for. The growth story has been hinged on the U.S. consumer remaining resilient. The pockets of weakness that we've seen have really been confined to the low end. That's because the labor market is in this kind of low hiring but low firing environment. I think the key, Tom, for that to change is that if corporates start flexing the layoff tool more aggressively, that might allow the weakness in the consumer to extend beyond that lower income cohort. And I think that could be the risk to the U.S. economy, because we know the consumer generates 2/3 of GDP.
Paul Sweeney, Craig Torres joining us here in the 9 o'clock hour solid. On that lower income cohort. He's got some brilliant research.
Amanda, are there some sectors that screen well for you guys right now? What are you guys focusing on?
Still like financials. I think when you think about some of the tailwinds in terms of a rebound in capital markets activity, steeper yield curve, deregulation possibly, less exposure to kind of global trade tensions.
So when the banks report their earnings on a Monday, they come out Tuesday with these huge bond offerings. Do you pick up the phone there?
The new issue market is a really attractive way to put capital to work, because those deals often come at a spread concession, right? So that's a way that investors can kind of participate in new issue pricings. Financials are a massive part of the investment grade index, but even outside of financials, I think there are a lot of sectors.
Can mere mortals buy new issue paper? Or is it like the junior members of BlackRock? No, you can't have that. Amanda has it.
No, the new issue markets are wide open. And actually what we've seen, even with some of the volatility in recent weeks, is that deals are multiple times oversubscribed, trading well on the break.
I saw one was 4 times. I can't remember which
so
one it was.
I think that's really, and there's been some consternation in the markets, obviously, with some of the news flow and whether or not we should read this to be risk off in terms of the rally in treasuries that we saw. Credit spreads were incredibly well behaved, and in fact, the modest widening that we saw on Monday has, for the most part, been completely retraced.
Are yields now normal? This is a huge cultural question. Are we getting back to normal, or do you see a vector towards lower
Yes.
yields?
So our expectation is for a normalizing monetary policy cycle, not an easing cycle. So on the front end policy rate, we are not expecting to retrace to the zero lower bound that was in place for much of the post-financial crisis era. At the long end of the curve, we expect structurally higher rates there as well because of an increase in term premium, focus on budget deficits.
Right.
So yes, I think we are in this high for longer interest rate environment. However, corporates have been navigating this. They've been refinancing into this new regime. They've been, taking actions to protect margins where they can to compensate for higher debt costs. So it hasn't been as disruptive as many market participants expected.
The next time you watch YouTube Premium, can you put it on 3 times speed?
I don't think actually that's an option,
videotape
Tom.
it?
I think actually the max is 2. So we're at max
Or
speed. Yes.
maybe you should slow it down.
Yes.
Amanda Lynam, thank you so much for your support through the year with BlackRock. Amanda Lynam, head of macro credit research, and always smart on where we're going. Are you and Jeff Rosenberg on speaking terms?
Of course, he's wonderful. Yes,
Yeah,
absolutely.
he's wonderful. That's
Yeah.
good. He's up to 4 people at BlackRock that like him. It's
Nice.
amazing. It's
BlackRock's they're over in Hudson Yards with the cool kids now.
Oh, really?
Yeah.
So like the shop, is it like painful because you want to shop?
It's beautiful, brand new. It's lovely. You should come over.
What's your favorite store there? Like, what's the unknown store?
Too
there?
many to choose, Tom.
The
Too many
Peloton
to
studio is there.
Yeah.
That's where I go.
That's right.
To the Peloton studio for
Oh,
live
no.
classes.
There's a lot to choose from.
So you're walking around in Lululemon tights.
No, that's not a good look.
No one. You think could you see me in Lululemon tights? Control room just turned green. Amanda Lynam, thank you so much for your support with BlackRock.
This is the Bloomberg Surveillance Podcast. Listen live each weekday starting at 7 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
It is Fed Day with many distractions. I thought the Microsoft and NVIDIA thing there we just did was interesting. Cam Dawson was lights out. Many other guests today. But we need to get back to the foundation of American macro strategy. George Goncalves joins us right now from Mufg on this Fed Day. Where are we going to be at 4 o'clock, George? And I don't mean like trying to guess the press conference, but if it's a snooze fest, I don't buy it. What will you listen to for excitement in the press conference today?
Hi, good morning. And look, I do think that as much as we tend to think of Fed events as these potential market moving days, and they usually are, I think this is one where it's the first meeting of the year. It's the first meeting under the new Trump administration 2.0 world that we're in. And I really don't see why Chair Powell would want to convey anything that ruffles any feathers. And I really do think that they're going to just stick to the script around data dependency, and that they've largely achieved a lot of their goals, but this is going to be the first meeting, by the way, they're going to skip in the normalization process. They cut 100 basis points last year. This will be the first skip. So I think it's going to be about explaining what is the game plan for the coming months.
Will there be any language to suggest that they are not committed to further rate cuts, data dependent, of course? Will there be any language to suggest, hey, maybe there's scenarios where we sit pat or maybe even raise rates?
Yeah, look, we're leaning towards a very neutral message out of Chair Powell, and just from the general statement as well. I think it's too early to make that call. That would be a surprise, definitely, if they come across as that the normalization process is a done deal, and it's going to take and the bar has been raised. I think that they don't want to limit themselves so early on in the year, and so I don't think that's the case.
So where do we think about just kind of macro strategy here, given that backdrop, George, as we think about stocks, bonds, commodities? What's the macro call from you guys in the beginning part of 2025?
Look, I mean, I think it's a wait and see, staying very tactical, not really super strategic at this point. It's really trying to understand what is the lay of the land going forward. And,
Right.
and there's a lot of jump risk, there's a lot of uncertainty, and we're still kind of going through it.
Okay.
So I think it's, yeah.
I mean, George, I'll go with that. You're going to grab the coupon and wait and see. But what do you do down with short-term paper? Our listeners and viewers in cash in 3 months, they got the Sweeney 2-year CD, whatever. I mean, at that short duration, you can take the coupon, but you got to make a call here. What does short duration do?
Look, I think that fixed income still on a buy and dips makes a lot of sense. We had that rise in rates; it was unsustained, and as long as that's the case, I think that we're okay with buying on dips. But the problem is that we don't have a dip right now. We're actually at the bottom of the ranges, and I think we would want to look for either if data gets stronger in Q1, if there are those animal spirits, the euphoria post-election, if they translate into activity,
right,
then rates are going to go back up again, and then that might be a chance to buy.
So, George, where's your asset allocation these days? I mean, and has it changed in the recent period?
So look, we've been more defensive. I mean, credit I think is basically priced in all the good news. You're kind of neutral to on credit. Mortgages are probably still the one fixed income asset class that has the most value, but it's at the mercy of rate volatility in the shape of the yield curve. Until we get more clarity on that, mortgages are a good product to buy, but really not the real time to do it at this point. And so we're relatively defensive and looking for yield.
George, we'll talk to you at 4 p.m. See if the world's blown up. George Goncalves with us, head of U.S. macro strategy, MUFG.
This is the Bloomberg Surveillance Podcast. Listen live each weekday starting at 7 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.
It is the newspaper. It's a daily look at the front pages. The Lisa Mateo moment. Lisa, what do you have?
Okay, Tom, you're not going to like this one. I'm sorry. This is in the New York Times. National test scores showing that the reading skills of American students continuing to fall. Let me get to the numbers real quickly. The percentage of 8th graders who have below basic reading skills, it was the largest it's been in the exam's 3-decade history. That's 33%. It was 40% for 4th graders. There was some progress in math, but it didn't just offset those losses. But the interesting thing is the reason why the experts feel like this is happening. They're just saying the increased screen time, more kids on their phones, social media, school absences, those kind of distractions. They're watching more videos on their phone, so they're reading less. They're watching the video.
I'm in the same boat.
Yeah,
I mean,
all the time
I
on
read
the
less
phone.
than I used to.
Yeah, well, it's true. Adults too. No, it's true.
I see the books stacked up in Afterthoughts bedroom unread. And what I know is there's something about finishing a book. It's gone. Yep. It's
just hard. I think it's the attention span, too.
I'm trying to do it by example. I'm reading Ruchir Sharma right now, folks. Fabulous book on capitalism. I'm reading David McCullough on Paris just because I need to buy 6,000 square feet on the River Seine. Blah, blah, blah. Paul, you're reading books. The answer is I'm trying by example to show them to go cover to cover. It ain't working. I'm going down in flames.
It's hard, but that's what they're saying. Because the screen times are causing them to have less attention span, they can't sit and finish a book and finish reading what they're supposed to be reading.
It's a huge deal. I don't know what to do with it.
It's a big one.
I'm depressed.
No. Well,
Hold on. I got to go check TikTok.
Thanks. This was an interesting from the Wall Street Journal. New York City co-ops, not the status symbol that they used to be. It has this really interesting read into it. These are buildings that, symbolize this old money elegance, right? We're talking about Park Ave, Fifth Avenue, even Central Park West, all those co-ops, because they're saying younger buyers, they want newer, flashier buildings downtown. They want to go downtown. A lot of the co-op buildings, they're older, they're built in the 1920s, and then they're choosing, the condos have fewer rules because the co-ops have a lot more restrictions.
Have you ever done the co-op process?
I've not done the co-op process. I'm reading about it.
I applied to a co-op.
Did you get rejected?
A fancy one, I would have been the poorest person in the building, and I was insulted by what they wanted from me. I said, no way.
And that's
away.
What a lot of people don't want to
They wanted my
deal with.
entire tax return. And that was a year where Vet Bill, had a business that went under, so it was like 54 pages. I said, I'm not doing that.
Yeah, they could order you to pay all cash.
It's also that they're new and slick in their downtown. Mm-hmm. I mean, it's not just co-op condo, right? Squeeze in one more here.
Okay, one more. Oh, this one's a dinger. Punxsutawney Phil's Groundhog Day job could be in jeopardy, okay? No. PETA is suggesting a vegan weather reveal cake because I knew you would love this, because they want to retire him to a sanctuary. That's what they're asking. They're saying, Phil, he's exploited. He would be happier living in his natural habitat. So the blue would mean 6 more weeks of winter. The pink would mean an early spring. And that's how the vegan cake would work
you.
instead of Puxatawny
This is
Phil.
disappointing. Can the president do something about this?
Yeah, can you step in here?
Groundhog
Give
Day
a
Sunday, don't forget.
presidential
Is it
order?
Sunday?
It's Sunday.
Is it? Okay.
Okay.
That's
I
when
think
you
I know
get the
what
story.
I think I know what this varmint's gonna say.
Yeah, I've been there reporting from the
have
Staten
you?
Island.
You've done
bureau.
it.
Oh, you did the
The
Staten
What you
local
done for
news
PIX?
section, you know that. I was there at the Staten
Did
Island.
you see
bureau.
one of our mayors have their hand bit?
I
Did you see-
actually
were-
did.
You were there.
I was there for that one. That was quite a show.
Did he drop the beast?
Yeah.
Did not.
No?
But he held it together. It was very impressive.
Yeah. Hold on to your badge, Lisa. Thank you so much. The newspapers with Lisa Mateo.
This is the Bloomberg Surveillance Podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday, 7 to 10 a.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.